What's up, everybody? Logan here again with another video coming right at you, and I'm officially 74 for 77. We did get out of the roll that we rolled on Friday. Monday was a down day. We'll go over when I rolled, what I did, but today we're going to do another zero DTE video with the checklist. Today was FOMC day. It was a Wednesday, November 2nd. The Fed decided to hike the interest rates 75 basis points to help combat inflation. I think they should have hiked it a little bit more, maybe like 100, and then do one more hike and really hurt the market before we get inflation fully under control. But I know what they're doing with just trying to stick a Band-Aid on it and call it good. So we're going to jump into this video. I did not trade today, though. I always take FOMC days off. Some people love them for the volatility. Personally, I just get too emotional, and today was a little chaotic. If we go over to the S&P 500, you had that big straight up mark, and then once the press conference started, we fell over 100 points, or right around 100. Yeah, what was that, 130? So a little chaos there. Market's not loving what he's saying, but he's staying the course of what needs to be done, because if we don't do anything about inflation, our money's not going to be worth anything. Everything's going to be expensive to borrow money-wise, and if you can't borrow money, it's really hard to grow businesses, right? Or at least scale them. So really curious to see what you guys did today, but let's get into this video. I do want to quickly say thank you for 11,000 subs. That was my goal coming into November, and we hit it. So let's see if we can get to 12,000 by Christmas. That's my next goal. If we can do that, I'd be super excited. So if you guys have yet to leave a like, a comment, and subscribe on this video, please do it below. Today, let's do like a surfer, like the surfer emoji. I'm a big fan of that one. Like I said, thanks for all the support. So we're going to look at the Discord real quick. And you guys could see I rolled that 3905 or 3900, 3905 to 3920, 3925. We go back over to Monday. Monday opened, right? Opened down. It stayed down for most of the day. We end up actually letting that trade expire. Super simple, super painless, had really nice crush on that premium right before, the market decided to shrug down Tuesday, and of course today. Now, granted, we did see, going into this week, right, when you have the Fed's hiking rates, you're going to see a little bit of shakiness, and also just how much of a green streak we've been on. This market likes to push in like 4 to 5 day increments. So Tuesday's trade is one I want to highlight, where we end up missing our call credit spread opportunity. I was watching the market, but just did not find a great entry point. That morning, it dropped too quick for me to get a fill. But we did actually, if you guys could see here, I'm in with half the contracts just because it was pre-FOMC. Sometimes you see movement, but we did actually get out of that trade in less than 2 hours. I collected 40 and 45 on my fills, closed them for a $10 debit. Some people actually got 50. I think 55 was the highest it had gone, maybe 60 on the credit. And then once we had the chance to close it, we just chopped the trade and went on from there. So that's been my only trade this week, was on Tuesday, because Monday we let the roll expire. But Tuesday was great because we're going to do that expected move math really quickly. We go over to the expected move chart for November 1st. We were looking at the EM low being 38.35, right? And we opened up pretty big. If we go over to Tuesday, we opened up right at 3,900. And I was looking, a lot of the indicators pointed to us going up. So I was still kind of on the fence with taking that call credit spread. And then by about 10:30, we continued to chop. And then you guys could see I did slap that trade on when we did back at the zero DT pump and iron at that 10:43 mark, which was right around here, because I'm back on Eastern time now. So right as we kind of hopped at that 38.50 resistance, and I said, you know what? Well, if we have that expected move math, let me go to the expected move chart again. Okay, well, I'm going to make my short leg, that 38.20 spot, because that's going to protect us from this EM low. So if that was to get tested and broken, I could take the trade off, knowing it's pre-FOMC, but that did not get broken. I think we always had at least 12 to 13 points of runway. The expected move had gotten a lot smaller by then as well. So I felt pretty good about where we were, right? Putting us where we were. end up protecting us. We were pretty much around the 85% chance that this was going to be out of the money already, just statistically over time. And we also sized in halfway just because our only edge was really that 3850 support with this EM low. We weren't at a 2x EM low where I felt confident in scaling in, but that's part of being consistent with your strategy, of sticking to your rules as much as you can. So we had that gap up, but right as the gap filled was when we decided to take that trade. Just because, like I said, we missed that call credit entry. That would have been good. And they need to understand more of is just because you missed your first setup of the day doesn't mean the trading day's over, right? You always have a chance at taking another shot at the market if the setup's there. Now, one thing I didn't do was on Tuesday, after I saw that move down, put a call credit spread on because I got emotional that I missed my entry, because we all miss our entry sometimes. And we continued to chop up and then, of course, ended the day around that 38.55. So that's one thing I want to touch on there is like if you miss your entry, that's the nice thing about credit spreads is you're trading, you can trade the call side or the put side. So if you miss your first entry and then we fall to support, you can slap your put credits on there. So super nice, super painless trade. The VIX has been sticking around that 25, 26 mark as of lately. It's been increasing a little bit, especially today with Powell. But we did not exceed the expected move the day before. Today, we actually did exceed the expected move by a little bit. I'm pretty sure. Yep. So the expected move is about 73 or 79. I'm going to check for today. Oh, 59. Okay. So 59 was the expected move. We almost 2x'd it, right? Like the 2x, the EM low is 37.38. We were about 22 points away. So crazy whipsaw day today. And that's why I just don't trade, because here's the thing. If I win Thursday and Friday, that will send my win rate from 74 to 77 up to 76 to 79. And just because I decided not to trade today helped me avoid a catastrophe, right? It helped me avoid the potential chance that, I get stopped out, I miss my stop loss, I get emotional, I get screwed at the end of the day during Powell's press conference. So that's one thing that I want to be like somewhat cautious about moving forward and that's why I don't trade FOMC, because I have such a high win rate. I want to keep it there, and you have to do what you can to keep yourself from getting emotional in these markets. So position sizing, like I said, we went half in on Tuesday just because FOMC was today. And, it's just like CPI stuff, right? If somebody catches news early, like if they were to hike this like 125 basis points or 100, even though they projected 75, I mean, this market would have been shot down into shock. And we might have exceeded 2x the EM even on that day. So trade timing, like I said, we waited for that support on Tuesday. We got the strikes outside of the EM low, and we knew we were going to stop out, right? Stopping out because we were pre-FOMC. If there wasn't going anything on Wednesday, I would have rolled the trade. But, when there's a big event, I'd rather take the risk off than hang out and try to get lucky with it. So far doing pretty good. Had that really nice roll come off on Monday. Made everything nice. I have been doing mentorship if you guys are curious and learning more about that. But these are some of the smaller profit goals I've been setting for some of the mentorship guys, or if you have some more questions about these 0DTs and want to chat with me, the email is down below to send an email to, or of course you can reach out to me in the Discord. But yeah, I'm curious what the rest of this week is going to bring. That's everything for me in this video. I just want to go over a quick 0DT on our trade that we took in the Discord on Tuesday. My only trade this week, really quick, really painless, less than 2 hours. And yeah, hopefully we can get some good setups tomorrow on Thursday and then also Friday as well, and then pick it back up the week after. But if you guys have yet to leave a like, I'd like if you would do that now. It'd help out the algorithm and the channel, and I will see you guys in the next video.